Welcome back to TechKidFX for another Agix price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Agix chart, which at the time of this recording is holding above a key area of support at around the $0.39455 mark. We are also holding below the 20-day MA here on the 1-hour chart, which is now acting as resistance for us to continue gearing up. We have also continued to obey the Elliot structures, where we had been seeing a bit of a breakdown to the lower side in a move that has now given us a reset of these higher Elliot wave count 2 to the lower side, and there are chances that we are going to start gearing up in the formation of these higher Elliot wave count 3 to the upper side. And before I get further into the technical analysis to give you the short-term scenarios and also sketch out my target areas to the upper side in the formation of that wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to first give you a recap of what has been happening here on the Agix chart, where you can see that we had been seeing a breakdown to the lower side in the formation of these larger Elliot wave count 2 in a move that managed to get into this minimum blue target area. And having fully maximized our target area, whatever we expected next was the start of an impulsive wave to the upside in the formation of this wave 3. And because of the impulsive nature in the formation of that wave 3, I also expected to see a 5 wave structure in formation, having the wave 5 fully maximizing our target areas and also giving us the high for that wave 3 to the upper side. And here on the charts you can now see that we have now peaked in the formation of that first wave in a move that has now given us a peak at around the $0.59505 mark. And having seen the high for that wave 1, we also saw a corrective structure in the formation of this wave 2 in a move that managed to get into this minimum retracement area highlighted here in white. And having seen the low for that second wave, whatever we expected next was the start of this wave 3, which is also an impulsive wave. And because of its impulsive nature, I also expected to see another 5 wave structure in formation, having the wave 5 fully maximizing our target areas. And if I zoom in so that I can now get to the short-term scenarios, you can see that we have now peaked in the formation of that first wave of this Elliot wave structure right here in red. We have also seen a corrective structure in the formation of this wave 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, I was able to come up with a minimum retracement area in the formation of this wave 2 between the fib level 0.5 and the fib level 0.78, which is a target area that we have now fully maximized. Though we lost the fib level 0.78 but continue to hold above the fib level 0.88, there are still chances that this is still a valid second wave to the lower side. But you also need to have in mind that having lost the fib level 0.78, this could be suggesting an alternative scenario. And before I get to the alternative scenario, assuming that we are going to see a reaction of these key areas on the Fibonacci's between the fib level 0.5 and the fib level 0.78, continue gearing up, start showing some impulsiveness in the formation of that wave 3, continue gearing up, and also see a break above the wave 1 high at around the $0.45422 mark, then that would be the start of that wave 3 to the upper side. And if that is the case, we can sketch out a target area to the upper side in the formation of that wave 3 using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. And that now gives me a target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.50189 mark. And that is the minimum that I can expect this wave 3 to the upside to do. And in case that doesn't happen and the breakdown continues, we lose the fib level 0.88 and continue pushing even lower, lose our key area of support at around the $0.39455 mark, then I'll be expecting one more leg down within this white target area to give us one more leg down in the formation of this wave 2. And in case such a move plays out, then that will be resetting this second wave to the lower side and give us one more leg down in this wave 2, then start an impulsive wave to the upside in the formation of that wave 3. So that is what I'll be expecting here on the AGX chart in case that impulsive move to the upside fails. And once that fails, then I'll be expecting one more leg down within this white target area to give us one more low in the formation of this wave 2 before we can start gearing up in the formation of that wave 3. But that doesn't mean that we can't run up from the current prices that we are trading within. That doesn't mean so. It's just an alternative scenario that we need to have in mind. And also taking a look at the indicators here on the RSI, we are trading at around the 43 mark, meaning we have massive room for us to fully support higher prices. Also taking a look at the MACD, you have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.